Hello, this is Mark McKenna with Realty Executives. How you doing today? This is June 2023 market update. Now, this market update here is for the Phoenix land area out here in Arizona. So here we go, folks. I'm going to give you a little bit of some numbers here. We are about 11,500 homes, total homes on the market. Single family detached homes are about 9,000 homes. That's low. Okay, let's just call it what it is. It's about 1/3 of where we kind of should be at this point. The other thing here that you need to pay attention to is the cumulative days on the market. That is, we were up as high as 85 days, being on the market there on the average. Now it's all the way down to 65 days, which basically means is we got high buyer demand going on, which is exactly what's going on because that's the time period that we are in. Things, if they do change, and they probably will change if we stay the seasonal type of path, it's going to tail off a little bit, the buyer demand in like late September, October time frame, fourth quarter basically. So rates are still kind of well, they're not super high or anything, or anything like that, but they're hovering, I think, right around the upper sixes or so. So which is still fantastic. I mean, it's not quite free money, but you could actually be able to plan to get into a home. We also have the sellers that are contributing towards buyers' closing costs. We're as high as about 45% of all transactions have some type of seller concession going on, and that's still about the same price, the same level. Now, the other thing that's going on here, you have to pay attention to, is that there's less and less price drops. Okay, price changes have kind of are trending down basically. So where it's at is pretty much kind of where things are going to be sitting. Now, as far as price goes, because we are about 95% of total of the peak, which happened was last year. Okay, and that's what we're coming down from. So those are some things to keep in mind. We are trending up a little bit in pricing, but everything's kind of hovering right around list price, about 1 or 2% or so. So if you're going to be in the market, plan on, if it's positioned properly in the market, you're going to be paying full price for the home. I'm pretty close to it. So you have those type of things. New builds they've increased recently in the market as far as number of sales and even the permits that are kind of going on. So they're about 10% of total inventory sold is a new build. Now we don't have investors really kind of popping up here. If we did, we would be exactly where we were a year ago. Okay, because that's the main difference here. Well, two main differences. One was the interest rate, which is higher now than what it was before, because we're at about 6, and it was at 3 before, at our peak. And then we also had investors out there. Well, investors have cooled off, and they're not out here as much and everything else, and they've kind of taken themselves a little bit out of the market. And the new builds, although are trending up as far as inventory goes, but it still takes them about 10 months to build a home plus, so don't worry about that so much. But we got inventory, we got things happening. Great place to live in Arizona. Fantastic. Okay. The other thing I do want to point out here is that the rental rates are still high. They dip down off the peak, obviously. Anytime you get the highs and the highest point or the lowest point, expect things to go in its opposite direction. In this case, from the highest point, it went down, but we are starting to trend up now just in recent months. So that is encouraging for landowners. Tenants and everything, it's costly to get into a place. So if you could buy, freeze time with your interest rate, do that, get into a home, maintain your situation when the rates drop, and they will probably, at some point they'll be dropping in the low 5s. Refinance, do that, restructure your debt and everything, and take control of your destiny. That's America. So do that. The other thing here is the household debt in 2021 was at its lowest point. So again, going off its lowest point, it's going to go up, right? So that's what it's doing. So don't listen to the news when they say, "Oh, look, consumer debt's going up and everything. The world's crashing." No, we came off of a peak low, and then naturally we're going to go up from that number. But we're nowhere near the 2006-7 crisis and everything where everybody was leveraged. Nowhere near that. So foreclosures are still low, down horribly. I mean, like there's practically barely any going on, but they are happening. But nothing to be alarmed about at all. Is there any bubble crashing, anything like that? No, don't plan on that. You want to get into a home, do it now. That would be the recommendation. Actually, fourth quarter is probably shaping up probably the best for you. It's possible rates may go down a little bit further. Sellers get a little bit more nervous in fourth quarter because it's like, geez, Christmas time, everything else. I want to get some of my house. I want to get out of here, and nobody's buying. So that could line up even better for you. But that's it. That's it, folks. Enjoy the time. If you have any questions, reach out to me. I'll be more than happy to help you out. Look forward to some of my videos. I'm going to be doing some hot spots videos in the valley, kind of showcasing some of the really cool spots out there. That'll be a series that I'm putting together in videos. That'll be on my website. Have a great day. Talk to you soon. Later.